Hello and welcome to another episode of the Smart Fulfils podcast. And today, a little bit different. I am joined by one of my lovely colleagues from Smart Financial, Charlene Love, who's been with us for a few months now. And we're going to talk all about financial protection. So this is very much Financial Protection 101. So we're going to give you a basic overview of what the different protections are that are available and some of the important things to think about if you're taking out protection. So, Charlene, thank you for joining me today. Do you want to introduce yourself properly? Do a better job than I've just done.
Oh, thank you for having me, Tamsin. I'm looking forward to it. So I'm Charlene. I'm the newest member of the team at Smart Financial. Been with the company since September, but I've been in financial services for 12 years. Been under an advisory role since 2018, and I have the Chartered Wealth Manager qualification, and I'm also currently studying towards gaining my CFP qualification as well. So hopefully we'll be able to help answer some of these questions.
I'm sure we will. So, financial protection. I know that lots of my clients, and I'm sure it's the same with you, when you first meet them, they'll come in and they'll go, oh, I've got this payment going out to Aviva or Legal in General or whatever, and they won't necessarily have the faintest idea what it's for, what they're paying for, what they took out originally. So we wanted to start with thinking about what the different types of insurance are, what the different types of financial protection are, and then why you might want to actually find out what that payment to Aviva's for rather than just letting it go off your bank account. So I guess the starting point is life insurance, because that's the kind of base level, isn't it? So tell us what life insurance is, first of all.
So life insurance will pay out on death. It will pay out a tax-free lump sum when somebody has died. So there are different types of life insurance. You could have a policy that runs for a number of years, or a policy that runs throughout your lifetime. So it's called whole of life cover. That sounds quite confusing with life insurance, whole of life. But under that kind of policy, you will pay a premium each month, which is, like you said, the Aviva, this Aviva payment that's coming out of your bank account. You'll pay a premium each month, and that means that a lump sum will be paid to your beneficiaries on death. And that will run for as long as you live. So if you live to be 90 years old, that will still be in place. And then whenever death happens, the lump sum will be paid out. The other type of life insurance is term assurance. So that will run for a number of years, and the number of years can be chosen by the policyholder. So that could be where you have dependent children and you would like the lump sum to be paid up until they reach independence, which
whatever. 35 then.
Yeah, maybe so. Whatever definition of independence you have. So if you would like your children to be able to go to university regardless of what happens, then you could have that in place till a certain age, for example to 21. Or you might have term assurance in place where you've taken out a mortgage. For example, if you take out a mortgage and that runs for 25 years, you would only really need life cover for the 25 years. And in that case, it's to cover the mortgage liability. So you would, once the mortgages have been paid off, you don't necessarily need that life insurance to pay out. The main difference between the whole of life and the term insurance is the cost. So the whole of life would be more expensive because that will for certain pay out at some point in time. The term insurance is there for a set period of time. and it might not necessarily be needed. I mean, the best case scenario is it never is needed. So you've paid the premiums, you get to the end of the term and it hasn't paid out. That means you're going on to live a life beyond that. But yeah, it's just there for that period of time to make sure that you have peace of mind for that duration.
Yeah, absolutely. I think that's the most important thing about financial protection. It's, we call it protection. It's there for peace of mind, isn't it? It's there so that if something, it's like any insurance. If you want it there so that if something goes wrong, then the people you care about, your family and so on, are financially protected.
Yeah, definitely.
So, just a thought about single people, because if you've got, I'm going to use the example of having a mortgage, because if I've got a mortgage, if I'm living in a house with my children, if I'm a single parent, for example, then having that mortgage protection in place means that the mortgage will be paid off and the children will be able to benefit from a lump sum, albeit they're not like to live in the house on their own if they're under 18, but there will be a lump sum available for them for their future. If I'm a single person with no dependents but have got a mortgage, this is just a very personal thing, but what's your thoughts about life insurance in that example?
Well, it depends what your preferences are. I mean, if you're a single person, you don't have any dependents. I mean, essentially what would happen, you've got that mortgage in place, something happens to you, the mortgage won't be paid, the payments won't be made after a month or so, and the mortgage company will be informed of your death at some point. But if you don't continue to pay that debt, unfortunately, the mortgage lender would be able to take the property. So if you had planned to leave your property in your will to somebody else, then the mortgage company needs to be paid the outstanding loan amount in order for that to remain your asset.
Sure.
So,
okay. So I guess the option is the money going to be available to pay the mortgage until the house can be sold and then the debt paid off and whatever's left? Or if you particularly want your house to be left to a sibling or something, for example, then you do need life insurance, even though it's not necessarily going to benefit you directly because you'll be dead.
Yeah.
Okay, cool. So one other question on life insurance, put you on the spot now. The lump sum that gets paid out on your death, does that go into your estate? And if it would normally, is there anything that you can do to stop that happening?
Yeah, so when the life insurance company pays out, it would be paid to the rest of your estate, so it would form part of your overall assets. So a couple of things to think about with that. Once you add that payment to the rest of your assets, is it possible that your estate would then fall under inheritance tax, under the net of inheritance tax, if you like? If so, it might be worth looking at the option that I'll speak about next. The other thing is, when it pays out, it can take quite some time. So when it pays out, it's paid to your estate. So your assets would be distributed in the same way as if you had cash in the bank or investments, we'll say non-pension assets at that point. So they will be distributed to your beneficiaries. Now, if there's no will in place, that really, I mean, we would also always say you should have a will in place. But some people might think, right, I have a life insurance policy that will pay out to my beneficiaries. That's it. I've done my bit, which is great. Taking the step to get the life insurance in place is a great step. But if you don't have a will in place, chances are your assets will be distributed in a way that you hadn't planned. So that's a wider conversation. even if you do have a will in place, the process of going through probate can take quite some time, and I'm sure anybody who's lost anybody will know that it is a really lengthy process. And so your beneficiaries won't actually receive those monies until that process has completed. So one thing that you could do, which would help with the inheritance tax issue, and also if you would want your beneficiaries to receive the funds much quicker, is you can set up the policy so that the proceeds are paid into a trust. Again, the trust, I think it's a bit bigger conversation. They can be quite complex, but as part of this conversation, it can be quite easy to get those provisions in place. So the life insurance company may actually, probably will, give you the option to do it at the point of making taking out the policy, so that when the lump sum's paid out, it's paid into trust, which means essentially it's ring fenced from the rest of your assets. So that insurance payment won't form part of your estate, won't increase any inheritance tax issues. And also, once the death certificate has been received, it will be quite quick after that, that your beneficiaries will be able to access the funds. So it just makes it a bit more streamlined, and when your dependents are really in need of that money, they are actually able to access it. Because it's one thing having the life insurance policy set up, which is a great first step, but if it's going to take a really, really long time for anybody to see any of the money, then it's not really served the purpose that you needed it to. It's there to give them peace of mind and allow them to concentrate on the awful situation that they're in without also having money worries as well.
That's absolutely right. It's a good point, that as well, because if you have taken out life insurance for a mortgage, for example, and your next of kin don't necessarily have money available to pay your mortgage, even on a monthly basis, that having that payment in trust means you get it almost straight away, and it gets paid out, and you can make mortgage payments, or you can get rid of the mortgage entirely, and that's job done. And it does take off some of that emotional burden that you've got. Like you say, it's going to be a stressful time, but at least not having to worry about money is going to be a massive benefit, isn't it?
Yeah, it's massive. And if I think about my family situation, I've got kids at home, a house to run, a job. So if the worst happened to my partner, the thought of sort of spinning all those plates and carrying on, looking after the children, trying to work, but then also, not being able to afford to pay the bills, it's just an added level of stress that just doesn't bear thinking about, and something that can be mitigated if you plan in advance for it.
Absolutely. Okay, so that's financial protection that doesn't benefit you at all, because you'll be dead.
Yeah.
What about financial protection that you might want to take out that does benefit you when you're still alive? So let's kick off with critical illness cover.
Yeah.
So tell us about critical illness cover.
So, critical illness cover sometimes can be an add-on to life insurance, but it can also be standalone. Critical illness cover will pay out, again, a tax-free lump sum on the diagnosis of an illness that's life-shortening. So if you've been diagnosed with something that says that you might not live for 12 months, then you would receive a lump sum. The critical illness cover is more expensive than life cover, because actually statistically speaking, you're probably more likely to be diagnosed with one of those illnesses, such as cancer, if you've had a stroke, if you've had a heart attack. And you don't, if you live beyond 12 months or whatever the term is under your insurance company, you don't have to repay any of that. But it's on that diagnosis, and like you said, it will benefit you. So if something like that happens and you get the payment, you might need to use it on something like making adaptations at home. If it's something, you know, if you've become disabled because of something that's happened, or you know, helping with the cost of moving home somewhere that's a bit more accessible, or the location's a bit better. Or it might be that, you know, your life's been shortened and you want to do some of the things that you'd always wanted to do. So yeah, it will benefit. It'll benefit the policyholder as well as the beneficiaries, I guess. So yeah, peace of mind be for you as well.
I had a client who had a critical illness payout. They had quite a late stage cancer diagnosis, but they did actually survive. And they decided to use their critical illness cover to go on a round the world cruise because they didn't think they were going to live very long. So they went and picked off some things that they wanted to do on their bucket list, and that's how they used their payment. But you know, it is, for some people it's cost of living and just day-to-day life, and for some people it is like you say, some of those one-off payments, even a new car if you haven't got suitable transport to traipse you to hospital and things like that. So yeah, it is a valuable protection if you can afford it. As you say, it does tend to be more expensive than life insurance. So you mentioned some of the things that critical illness covers. So it's not just if I get a diagnosis of I'm not going to survive for more than 12 months, then critical illness will definitely pay out. So it has to be a certain condition.
Yeah, well, that would be specified under the policy that you take out. So I guess the more far-reaching the definition, the more expensive the policy would be. But I think most of them would cover sort of the ones that I mentioned earlier, a life-threatening cancer, because it might be a milder form of cancer. I mean, God forbid, you know, none of us want that to happen to us, but there's some forms that might not be seen as life-threatening in that way. So yeah, there will be definitions. So it's important, if you are taking out critical illness cover, to have a look and understand what they are. If you have, sorry, just going off, if you have something like that runs in your family, then you would have to tell the life insurance company as well, because it might be that you're not covered for that, or that they might have conditions applied to it. So it doesn't mean that you can't get the cover, but it's just something that would have to be taken into consideration.
And that's really important, isn't it? Because if you're going to pay for financial protection, you want to make sure that it pays out, and setting up, if you like, to any conditions that you've got, any investigations that you're having, anything that runs in your family is really important, isn't it?
Yeah, absolutely, because you might have the best of intentions, you might be paying the premiums for many years, and then when it comes to making a claim, it might be that the insurance company could just say no, you know, you weren't covered under it. And that, to sort of caveat that, I think there is a perception that insurance companies are always determined not to pay out, and I don't actually think that is the case. I think they really do want to help, but you know, help yourself by being honest with that, because it, as I say, it's likely you can still get the cover. It's just that there might be conditions with it, and it will get found out. So for example, if somebody smokes, and they say they don't smoke, and then there are ways of finding out whether that's true or not. So it's just about being honest with it.
Yeah, absolutely. You might as well pay a little bit more to begin with and make sure that the cover pays out if you ever need it than paying a lot less, but actually you'll be paying for cover that's never actually going to pay. I think you're absolutely right. I think insurance companies, if they want to avoid paying claims, that gives them a bad reputation in the marketplace. So they don't set out not to pay claims. I've had quite a number of instances over my career where people have had successful insurance claims. One of my best friends is receiving income protection for breast cancer diagnosis. One of my clients has been receiving income protection for the last few years, paid up until retirement for a liver transplant. As I said, I had a critical illness claim from previously. So they do tend to pay out. It's just you've got to make sure that you give the correct and accurate information. And even if you remember something later on that you've forgotten to mention during the application process, if you can possibly tell the insurance company before you put the policy into force, even if it, as I say, it ends up costing you a bit more, it really is well worth doing, and making sure that that policy is going to pay if you need it, if and when you need it. Okay, so one more type of financial protection that's kind of commonplace for personal protection. So really concentrating on personal protection. There is also business protection that's available. We're not going to focus on that today. That might be a topic for another day, but for today we're focusing on personal protection. So the last remaining type is income protection, and I think randomly this is my favorite sort of protection, because I think this is the most useful one, and it's probably the one that the least people have.
So I think there's the perception, isn't there, that you only need income protection if you're self-employed, or if your working position is a bit unstable, but that's not actually true. It can be useful for everybody. So what I would say with income protection, some people think, oh, well, I think work would, if something happened to me, I think work would pay. And sorry, just to say, income protection is for if you can't work due to some sort of disability or illness, and it can be it doesn't have to be a critical illness like we've just spoken about. It can be that you work in a physical job and you've broken your leg and you can't work, or it could be under some policies that you're struggling with your mental health and you're not able to work for whatever reason, or I think you just said your friend had breast cancer. It can be all these. It's more far reaching in terms of diagnosis, but if you can't work due to illness or incapacity, then income protection would pay an income as opposed to the lump sum that you would receive under the life insurance and the critical illness. It will pay an income every month. So so you can have you can choose the amount of cover, but it would usually be a percentage of your post-tax earnings. So it wouldn't be the same amount. So if you earn I don't know, £25,000 a year before tax, it wouldn't pay £25,000 a year. It might pay 60% of that if something happens to you, and it would pay after a period of time. So I started talking about something else earlier. When people are employed, they think that if they can't work, then they might continue to be paid for a period of time. They might receive full pay, they might receive half pay, but most people aren't actually sure. You and I would have had conversations with clients and they'll say, what happens in the case that you can't work, and they kind of oh well, I do think I will be paid, but I'm not sure how long. Nobody really knows. So I would always recommend finding out, you know, and getting that for certain, because it's good to know for your peace of mind, or it might actually scare you into thinking, oh, actually, you know, maybe I do need income protection insurance. So as I said, after a period of time, you will start to receive an income from the insurance company, and that will pay for as long as you need it to. So if you've taken out income protection insurance that will pay until you're 60 years old, and you can't work until you're 60 years old, it will continue to pay, or until you are able to go back to work, or until death, in the sort of worst case scenario. But it again, I think insurance companies get this bad reputation, but it can be quite generous because it gives you time to recover. You're not being told, oh, it'll only pay for 12 months. It's for as long as you need it to pay. And some companies might actually, I guess, in their benefit as well, will help find ways to get you back into work, which I think is really good, because you do need that help. If you're unable to work, having the financial help is fantastic, and it takes away a massive amount of stress. It means that your bills can still be paid. You don't have to worry about you know, not being able to put food on the table or enjoy other activities. But it's also good to get back to work when the time's right. So if you've got that support to get back, so that it might be that they say, oh, we'll pay a bit less as you phase your way back into work, which I think is great. But whichever way, it just gives a bit of breathing space. And I guess where people have this misconception that you only need life insurance when you're old, or which is incorrect. You know, the thing is when you're young and you've got a young family, it's likely that you've got bigger liabilities like the mortgage. You've not got much by the way of assets. You know, you've got a young family to support, which you might have childcare costs. You might, you know, you might need the two incomes to continue to keep the house running. So actually, younger people do need, well, all of these covers, but I would say income protection insurance is really important as well, just to be able to keep living if you're not able to work. And that's the same, I guess, if you have, whether you have dependents or not. This one's really important because it means you get to keep the lights on over your head, even if you've not got children, even if you've not got a spouse. It's helps you survive and live your life. Yeah,
absolutely. If you know, I think almost even more so if it's just you. If you're a single person, whether you've got children or whether you haven't got children, if you want to live and not have to go home to your parents, if that's even a possibility, you need to have income protection so that if something happens to you, if you're so ill that you can't work, you need to make sure that there's a way that you can keep, as you said, keep the lights on, keep the heating on, and keep food on the table. And I've certainly seen the benefits of that. I know my friend who's got breast cancer, she had a limited term income protection policy, so it's for 5 years. But even that, even though it was 5 years, it's still something. It still meant that she can take 5 years without having to worry about getting back to work, without having the stress of it. You know, she's had chemotherapy, she's had radiotherapy, she's been through the mill, her body's been through the mill with everything that she's been through. She'd had financial stress as well. Then I don't think she'd have come through it as well as she has. So yeah, I think income protection, for me, income protection is the most important one of them all. And I personally think it tends to be more affordable than critical illness cover because it's not paying out that lump sum. It is an income benefit. It does seem to be a little bit cheaper, if not as cheap as life insurance, but it's certainly, from my experience, not as expensive as critical illness cover.
Yeah, it like you said, it's not the lump sum, and the likelihood is within a period of time you will return to work, and then you know they stop paying. But
Absolutely.
yeah, I think it's massively important. Just like you said, if whichever illness you might have, or which, you know, for whatever reason you can't get back to work, it's enough of a challenge as it is, being able to just make those steps and get back to your normal routine without also having the stress of having no money. Probably will delay, and you know, delay any recovery. So
yeah, no, you're absolutely right. So with all those things, if you've got a payment on your bank statement from a life insurance company and you have no idea what it is or what it's for, just please call the company up and ask if you've got a policy with them, and ask them to send you details. Life insurance or critical illness cover or income protection, whatever financial protection you've got, should be reviewed on a regular basis as your life changes, because when you take it out, you might be in one situation. You just need to keep it under regular review, don't you?
yeah, definitely. Yeah, life, you know, things happen. And yeah, as your situation changes, you might have taken it out with the best intentions, but actually, you know, for your personal circumstances now, it's no longer the best option. But you know, it's good to have it in place. Good to have something in place. And you know, for some people, it might be to take out a new policy, or it costs too much, but you know, it's worth looking at how, you know, if the cost really is an issue, you might be able to prioritize what, you know, what really concerns you, and amend the cover so that the cost is reduced. So before, with the income protection insurance, if you can live with your current savings, or if your employer will pay you a period of time and you can delay the payments for 6 months after whatever it is has happened, it might be a bit cheaper than if it started paying out after 3 months, or you know, if you can prolong it a bit more than that. But actually having something in place, or even if it's a smaller percentage of your income, even if it's a small amount, but it can just cover your essential bills and just, you know, take that stress off. Something is better than nothing.
Absolutely, totally agree with you there. So review your cover. There might be options if you do need to reduce the amount. Just make sure whatever you've got is suitable and appropriate for you and your circumstances. And if you've had a change of circumstances, such as getting divorced, make sure you review that cover. Make sure that whoever's on the trust, whoever the beneficiaries are still the right people. Make sure that the income protection is paying out to the right bank accounts. Make sure that whoever's covered are the right people. Yeah, that's brilliant, that, Charlene. Anything else to add before we finish for today?
No, well, I was thinking earlier, you know, when we, you know, it goes without saying, when you buy a car, you take out insurance, because you have to, you know, that's compulsory. But when you buy a phone, you take out insurance. When we buy a pet, one of the first things you do, take out insurance. So, you know, it might be that your puppy actually has more comprehensive insurance than you have. So just think of, you know, it is important. And people have a bit of pushback for whichever reason. You know, for some people, they don't want to think about the worst case scenario. For some people, they might think they can't afford it. But you know, it is important, and by burying your head in the sand, it's not really the right solution. So just, if you take action, review it, get it done, and then you don't have to think about it. It's peace of mind. It's something ticked off the list, and something that will just yeah, give you peace of mind, and know that you've got everything covered.
Perfect. Brilliant note to end on. I love that. You'll insure your pet, but probably not yourself. Charlene, thank you so much for joining me today. You've been fantastic, and we'll see you again soon.